Did you know that the annual insurance review is one of the most neglected tasks by trucking companies? And this is so important because the top 5 costs of operating a truck are driver salary, fuel, equipment financing, repairs and maintenance, and trucking insurance. The biggest problem of neglecting this task is it can lead to very costly trucking insurance coverage gaps. So let's get in the loop with Luke and unravel these trucking insurance secrets. Okay. Let's be real. When was the last time you had an annual insurance review? Did you discuss the changes in your operation, equipment, personnel, turnover, or radius of operation changes? Taking the time to review your insurance policy and understanding what to look for when receiving multiple insurance quotes at renewal needs to be a priority. So, what do you need to know about these insurance reviews? It really comes down to one thing: asking the right questions. This can lead to a difference of thousands of dollars on your premiums, keep your company alive, and even help you determine the right time to change your commercial trucking insurance. The annual review questions should be asked several months before current insurance coverage expires. This is important to plan for the best type of coverage you actually need and give time to receive multiple quotes. It is also important to make sure you do not jeopardize your success by cutting corners on insurance. Here are 7 important questions to ask that will help you uncover trucking insurance gaps. Is my fleet growing? This is critical as a newer carrier or if your insurer has strict growth limitations. Every owner, operator, and motor carrier fleet should have short-term and long-term growth goals for your trucking company. However, these goals must consider how rapid growth can hurt your business. If you are growing too quickly, this is a huge red flag for insurance providers and can get your policy canceled if you do not provide adequate proof that you can handle this growth. For example, the largest trucking insurance provider may allow a new owner-operator to grow their fleet by 4 trucks and drivers in a year. However, Lancer Insurance usually will not allow new venture growth for at least 1 to 2 years. So if your goals do plan for growth, Progressive will be the best provider for you so your policy doesn't get canceled. It is usually recommended to grow gradually by adding 1 truck 2 months into operation and a 3rd truck 6 months into operation. Regardless, each time you add a truck, you should revisit your insurance coverage to add that truck to your policy and see if you qualify for any multi-truck discounts. Fleet discounts can save you a lot of money on coverage overall than if you were to go with the lowest quote on insurance for another single truck. Have I changed the type of cargo being hauled? Different types of cargo possess different hauling risks. While most carriers end up with $300,000 of cargo coverage, there can easily be gaps in coverage. If you have changed or added the types of cargo you haul, it is important to find out the cost of that new cargo and make sure the cargo or hazmat insurance covers your freight. If you do not have a broad form cargo policy, be sure you know exactly what loss scenarios are not covered. Is your fleet focused on specific driving routes? It is important to consider your expected routes and delivering radius. For new carriers, most insurance companies want you to stay intrastate or within a 500 air mile radius from your business location for the first couple years of your business. As you prove your safety history and show you can manage your company well, then expanding to long-haul trucking will be more affordable. Now, you need to consider how many different driving routes your drivers use. The more regular routes you operate in, the more familiar your drivers are. Insurance companies are big fans of regular routes as it lowers the overall risk of an accident. However, the location of these frequent routes could negatively affect your risk as well. Underwriters use road safety data that highlight the most dangerous roadways to map out which states, metropolises, and cities are the riskiest to travel in. Underwriters also know that due to the associated issues related to dangerous locations, drivers are more likely to exhibit high-risk driving behaviors in those areas. Letting your underwriter know the safer routes your drivers frequently travel will help you reduce your overall risk and insurance rates. What is and is not covered in my insurance policies? If you have your own authority, your truck insurance policy requires liability insurance. The minimum amount required is $750,000, but many truckers choose $1 million in coverage. You should ask your truck insurance agents to walk you through your limit options. While $1 million in liability may sound high, trucks can cause a lot of damage even if it's not your fault. Discuss the benefits and costs of an umbrella policy to protect you in the event of a catastrophic loss. What are the main factors driving my premium? Insurers base risk on several factors such as claim history, your age, driving record, credit rating, criminal record, area of operation, years of experience, and what you are hauling, age of equipment, garaging zip codes, and more. If your quote is high, then ask why. You can then take steps to fix when you renew the following year. This may include hiring only experienced drivers with at least 2 years of CDL experience, or reviewing your DOT safety record and fixing gaps in your safety plan, as the number of unsatisfactory vehicle and driver inspections will increase your pricing and/or coverage options. One of the biggest benefits of working with CNS Insurance is that we also assist haulers of all types with the necessary compliance advice that comes with owning a transportation company. Our DOT compliance specialists are well versed in the FMCSA rules and regulations and offer a number of services for you, such as proactive safety program designed to keep motor carriers compliant with the basic DOT regulations that nearly all carriers must follow. If you have any questions or want to find out more, click the link below. What are your payment plan options? Most insurance companies offer several options for payment, such as making monthly installments rather than paying it all in one lump sum. However, you can lower your overall insurance premium by about 10% if you can pay the annual premium in one shot. A down payment with monthly installments will cost more. It is important to note that some states, such as California and New York, require new carriers a 50% down payment on their commercial auto insurance premium. Make sure you are prepared. Speaking of having cash on hand, our last annual insurance review question to consider. If there is an accident, how much will my insurance policy pay? This is important to know if you want to ensure that you are adequately covered. Do you have enough cash on hand to cover that deductible? You may decide to take a higher deductible to lower your premiums, but you need to understand that this will also reduce the amount you are paid in the event of an accident. Well, there you have it. The most important questions to ask in an annual insurance review. Now, the question to ask yourself is, how can you find the best commercial truck insurance rates? This is simple. Allow a CNS insurance specialist pull multiple insurance quotes for you to find the best rate. Give us a call anytime and we can discuss lowering your premium or getting a quote to see where you stand. Call us at 800-724-5523 or just fill out a quick quote linked below to get the ball rolling. And don't forget, stay safe out there.